Hi traders, welcome back to the channel. So today I thought I would put together a quick little video as I had a comment, one of my subscribers asking about this a few weeks ago on the channel. So it is the topic of how can we know where to set our profits or targets if a market is making a new all-time high. So what does that mean? For example, here we have the S&P 500. We had the all-time high right here that we made at the end of 2021. We can see that we are coming very close to that level, but then once we breach that level, how do we know where we can scale out or be taking profits on our trades? Okay, so for this, I go into several strategies on my trading courses, but I'm going to make just a quick summary here. And we're mostly gonna base it off of technical analysis, so basically number 3 Fibonacci extensions, but I wanted to also touch up on two other factors that should be under consideration. So first thing, it's pretty obvious, is fundamental market news. So if we make a new all-time high, but then there's a big news event like possibly war breaking out internationally, or the FOMC meeting, a new interest rate hike, etc. Obviously, those things are going to have a big impact on the markets. So those are news or catalysts that could be a good signal that you should be cutting up your exposure at all-time high levels. The second one is mostly a psychological thing, but it's big round numbers. You know that markets love to trade around big round numbers. You can see right here the all-time high on the S&P was 5,028.25. Obviously the 5,000 level right around here is a huge psychological big round number. So if we do break up from here, then 5100, 5200, 5300, any big round number, 5500 especially, all those numbers, if you even look at the option strike price volumes, you can see that in general big round numbers like this get a lot of interest with a lot of resting volume and liquidity at those levels. So those tend to act as magnets for price, just like when we have a volume profile. And I always talk about this, the high volume nodes and points of control where we have the most volumes tend to act as a price attraction point. Same thing here, big round numbers are going to be just levels that a lot of traders are going to pay attention to. And the last technique that I use is using Fibonacci extensions. So for that, I like to use 4 basic extensions. We have here our hinges from the 0 and 100%, and then I use the 127.20 extension, 160.180, which is the golden ratio, 1 standard deviation up, 200%, which would basically be double the measured move, and then 260.180, which is 2 standard deviations up from the golden ratio. Okay, in general, obviously this area 127.20 to 160.180 has the high ability to be hit. And I use this not only at all-time highs, I use it also to measure like range breakouts, etc. But when we are trending and a market is going to make a new all-time high, you can know that in general we're going to have something like this where we have extension or impulsive legs, and then we're going to have retracement legs which are shorter. In general, the extension legs, you want them to be as symmetrical as possible, and you expect the pullbacks to be shorter than what the extension legs are going to be. Now, the main issue with trading at all-time highs is obviously there's nothing to the left of the chart. So if we come up and we're around this area, we don't have anything on the left side to use as a guide. There's no swing areas, there's no gaps, there's no obvious areas of support and resistance. So that's where the Fibonacci extensions come into play. For this, in general, I like to use high time frame charts. So I will generally use the daily or the weekly chart as far as setting these targets. And even if I'm day trading, I'll just mark off the levels, and then I'll go down, into like the hourly charts, etc., and use those levels as a guideline. Again, this is not a foolproof science, but it is the one of the most useful tools for that. So, for example, here, this is the S&P weekly. What I would do is, you can see we have this impulsive leg, we have this retracement, and now the past few weeks we've had a really nice impulsive leg. We've broken above this swing high, so now our sights are pretty much set on this resistance areas here, followed by the all-time highs. We also have 5,000 right here, big psychological level. So then what I would do is I take my Fibonacci tool and I hinge it from this swing high down into the higher low, and I set my extensions, okay? And you can see right here, previous all-time high, 5,000 level right around here. So you can see first 127.20, pretty much right in line with this previous swing high. So this is a very important level around the 4,880s. And then after that, I will be focusing on this area right here. If we break this all-time high swing, then I'd be looking right around the 5,080, which is the 161.80 extension as my first area. If we keep pushing up further, then I'll be looking at the 200%, 52.94, etc. Okay, so that's one way that I used to build them. Just look for the rotations and then do a projection of those. Here I can go into the daily chart if we want a little bit more detail on this. But you can see right here, if we go back to, for example, after the pandemic, we had the dump from COVID and then this huge move up caused by, the whole federal rate cuts, etc. We had all the markets making new all-time highs. So then I would do the same thing here. Like, for example, in August of 2020, we made a new all-time high right here, right around the 47.60s. And then we had this pullback and market started pushing up again. So here I would have done the same thing. I grab my Fibonacci, hinge it from here down into the bottom. And let me just get rid of these candles here just to clean the chart up. Right there, if I cut that off, you can see that at this moment, market was pushing up, and you can see how we got into the 161.80, and we had 4 straight weeks of resistance before we pulled back and made a new swing low right here. Okay, so you can see in this case we had an all-time high. First area of interest would have been here, second area right here, and you can start trailing stop or start taking profits there. Then over here, we will do the same thing again. I will go to this swing high, put up into this swing low, and then if I just hit play right here, you can see that market then we will be looking for a new all-time high target. Market here will be pushing up. 127.20 was tapped perfectly. Now it's trying to push away. Second weekly candle, so now we have 2 weekly candles rejecting from the 127.20, and then we started pushing back and that was pretty much the all-time high back there. So you can see how pretty much every leg we can apply this Fibonacci extension technique just to look for areas of possible price price reversing or stopping. We can do the same thing here on the Nasdaq. If I zoom out, you can see, for example, right here we have all-time high right here. We have this impulsive leg retracement, and now we're pushing back up again. So I will do the same thing. I would take my Fibonacci from the swing to the low, and in this case you can see how 127.20 is coming right up and is in line with this little swing high, and then just above that 161.80 is pretty much right above the previous all-time highs on this. Okay, and then finally, if we go into, let's say, Forex, here we have the Japanese yen and US dollar, which actually just made a double top at the all-time high level right here. And if we would have applied this technique, let's say on this rotation here, you can see that we came up. We had a lot of significant, a little bit of resistance at 127.20, which was right around this highs here. Then a lot of resistance at the 161.80, which was right around this areas. Oh no, sorry, that's a little bit lower, which was right around here, pretty much around the candle closes before the spike all-time high. And then we came up, we just missed the 200. So what would I do now with this? Well, you can see that now we are coming back on a retracement. We have continuous higher lows and higher highs. So now I would expect some kind of higher low to be established around here. And then let's say if this starts pushing up and we break all-time highs, then I would take my Fibonacci and just hinge it from this swing high to wherever this low is going to be. We don't know yet how long it's going to go, but let's say that this was the low right here, and then I would use these levels as my guidelines. And also, like I said, big round levels as well are significant, but I would use my Fibonacci extensions in this case to measure possible targets for new all-time high levels. Okay, that's pretty much it for the video. Hope you have enjoyed it and it's been insightful. Again, this is one of the main techniques that I use when it comes to setting profit targets when we are at new all-time high levels in the markets. If you want to learn more about these things, check out my trading courses and subscribe to the channel here so you don't miss out on any new videos. Take care.